Hello, everybody. This is your daily real estate practice exam question, and today's topic we are going to be talking about tax liens and taxes. The ugly T word. And that is, keep in mind, that is one of the government powers. So let's take a look at the question. The question is a lien, which always has the first claim against the land, is A, an IRS lien, B, property taxes, C, a mechanics lien, or D, a mortgage. So let's take a look at the first one. The first one is an IRS lien. So that would be something that has to do with income taxes. That is going to be more of a general lien, would probably go on all of the real property that you own, that an individual would own, and also potentially their personal property. And it would be a general involuntary lien. I don't think anyone's volunteering for that one. So let's look at C, a mechanics lien. Mechanics lien is one in which a contractor has started work on a property and they have not been paid. So they would file a mechanics lien on the property, which would be a specific involuntary lien. And what do I mean by specific and general and voluntary and involuntary? What I mean by that is this. A mechanics lien is going to be specific to that property. Okay? And so let's say you own 3 to 4 properties. It's not going to go on each one. It's going to go on that specific one that they did work on. And an IRS lien would go on all of the properties that you own and also your personal property, meaning that it's going to be a general lien. The last one is a mortgage lien, which is going to be a specific voluntary lien that all the liens that we have just spoken about, A, C, and D, an IRS income tax lien, a mechanics lien, and a mortgage, all are going to take priority and be paid off in the order in which they were recorded in the county clerk's office. Okay? So at the local municipality level, they are going to be recorded by the person who is putting the lien on the property, or the entity if we're talking about the IRS, and they all are going to be paid off in the order in which they're recorded, except for our property taxes, also known as our ad valorem taxes. And ad valorem taxes are going to be a situation in which that means it's according to value. So you take the assessed value, multiply it by a tax rate, and there you have your ad valorem or general real estate taxes. So guys, I hope you like this one. If you do, remember, hit that like button, hit subscribe, and I'm going to see you guys real soon.